Hello and welcome to Wake Up and Smell the Profit Q's review for Monday, July 31st, 2023. It's now the 29th, and it's episode 3 of the Q's weekly high drama. We start off with the Bollinger Bands applied looking back to 2018, and they used the 39 simple period moving average for the middle band, 2.5 standard deviations upper and lower bands based on true low. So it's very similar to the S&P 500, where there was breaches and closes in 2018 above the Bollinger Band upper band and stretching it prior to the COVID crash era, and then the run-up in 2020 going towards the October, November, where it really took off and had a couple of breaches here. Looks like really no closes above it. And then the run-up into the top over here going into beginning of 2022. Now let's focus on this area, February 2023. I'm going to zoom in a little bit. Now look back here in August 2020 where it had a breach above it. So we had a breach here and a close above it, but it's similar with the downdraft coming out of it in 2020. And there was a downdraft here and then a run up back to it. And this run up October, November was about as intense as it can get. Not so intense here with recession threats hanging over our head, but nonetheless not too bad. Did not make it up to the upper Bollinger Band where it did back here. And then it got even more intense in this current area. May, especially June, here is when it really took off. And that was even more impulsive and stronger than back here. And you can see the Bollinger Band, upper band, is really stretched even more than it was back here. So if history repeats itself, we have a long way to go if you're looking back here to get to a top, as this could be just starting. And of course there's going to be fits and starts along the way, just like back here, but nonetheless a solid march upwards and onwards to the right hand corner. Now I've added the other bands, the Stark Band in black and the Channel 3 High in yellow and green. I'll zoom into the current area now. And you can see that the closes above the upper Bollinger Band is similar to the S&P 500, where there's 4 closes above it and now 2 breaches. Here there's 3 closes and 1 breach so far, and there were 7 closes in a row above the Channel 3 High from here to here, and then it went back under and then back above it. So it's really pushing the envelope upwards, and that leaves the Stark Band upper band and the Bollinger Bands pretty close together. So let's mark that high number there for the Bollinger Band down on a piece of paper, 393.14. And now the high drama kicks into high gear. With the Propulsion MOMO Up qualified from Friday's bar, along with the relative retracement up 2 and relative retracement up 1. Now I'll zoom in a little bit closer with the bands switched off. We'll run through the qualification sequence one more time. There was an up close followed by a down close, followed by an up close above the levels in question here. So next week, starting Monday, there must be an open higher than this close from the 23rd. Then during the week, by end of day Friday, tick higher than this high from the bar on the week of the 16th. And then end of day Friday, August 4th, close above this close from the bar on the end of week 23rd. And these levels will be qualified and confirmed. And in the Q's weekly chart that shows all of the marks 13s and risk levels, I'll zoom into the current area now. And what's also qualified is the TDST levels for everything. So that's the buy TDST, and that will become qualified and confirmed if everything pans out that we just talked about. So that's the huge indicator here when that happens. And if it really pans out, I'm going to get on board and do some buying. And there should be enough wiggle room with these risk levels here. We have an aggressive combo and a variable aggressive combo. So that's above the high here. And there's another one up here, a phantom combo and a variable combo for resistance levels. And I had a lot of time to think about the Q's rebalance that the SEC laws mandated when it becomes too lopsided here in Morningstar. I don't know if they've actually updated it yet to the rebalance. Probably not. You can see that the technology was 50% of the investment percent. So my thought is that you can hear all the talking heads in the financial news shows, etc., talking about a broadening out of the bull run to include other sectors, and I can see why. So if the Q's is the number one go-to ETF and they rebalance it to include more of these other sectors within it, then they're going to get bought up just because of association with the Q's. So my call is the Q's is still carrying the market and will continue to carry the market onwards and upwards. And you could see healthcare at that time was 7.25. I expect to see that bump up. And it's actually healthcare that has been an early adopter of AI and some of their back-end processes like billing, etc. United Healthcare being the biggest adopter. I would expect to see materials bump up as they've been doing pretty good lately. So I think this is out of date. We'll check back often and see if there's a change to the upside in some of the other sectors.